Hello everyone. I'm sure you're doing great. So now we have just very quick session to simplify relevant costing. So I'm C. Anshubudia and I'm going to be taking up your ACCA PM, a very important topic. That is a topic that is a short topic in the exams. Yes, you will find this topic to be there either in section A or section B questions always in your exams. So is it a very important topic? Yes, of course, because it is going to guarantee at least 5 marks in your exam. Yes, at least 5 marks. And who knows the value of these 5 marks when you were stuck at 45? So every mark count in the exam. Yes. Okay. Before we proceed further and we start with the session, on a quick note, I just want to understand that, guys, am I clearly visible? Am I clearly audible? And I do hope that there are no challenges that you are facing. Please do type it quickly in the chat box with the full energy that we have today, being a morning session for all the students watching at 9 a.m. IST. Give me a quick revert. Great, Pooja. Thank you. Before I even go into the topic, I think let's clearly understand one thing very properly, that, ma'am, what is exactly relevant costing, or we call it as short-term decisions. So what exactly is that? Okay, what exactly is a relevant costing and why do we call it as a short-term decision topic as well? So I think let's go into it with a small example. So here I can take a very small and a very quick example. Okay, and that example would be, let's say I am owning a car, but the next car that I want to take up is, or one I want to buy is maybe an Audi. Okay, so now just understand, you have already a car with you and now you want to buy a much larger, a much bigger version of it. Let's say you want to buy Audi. Now, what will be your important pointers when you are considering to buy the car? Let's say you have funds available with you. Okay, so funding is not an issue. But what do you think would be the relevant cost for you when you are planning to buy the car? So can I have some inputs? What will be your relevant points when you are planning to buy a car? Just think and tell me. Let's not keep it Audi. Let's keep it as any other car that you want to buy. So you have one car already with you. Okay, and now you want to buy another car. So my question is, what are the pointers that you will keep in mind, or what is relevant for you when you're taking this decision? Do type it in the chat box. First relevant cost for me would be, what is the additional amount that you have to pay to buy the car? Second relevant cost for me would be, second relevant cost for me would be any other ancillary cost that is coming with it. Now my next question is, will the garage cost be a relevant cost for me? The garage where I'm going to park the car, will it be, a relevant cost for me? Yes, Pooja, that is also very valid point. That what is the exchange value that I will get? What is the scrap value for my old car? Yes. But now my question is, the garage at which your old car was parked and now you're going to park your new car, will it be a relevant cost for you? Will the car cleaning cost be a relevant cost for you? Do type it in the chat box. Okay, you already had a garage where you were parking your old car. Now that old car is out, new car is in. Will this be a relevant cost for you? Okay, Pooja says yes, ma'am. But now, Pooja, I give you one answer again. So for garage, you were earlier paying a monthly rent of 5,000. Even with the new car, you are going to pay a monthly rent of 5,000. So is this really going to make any changes if we have to take a decision whether you should be buying a new car or not? Will it make any difference? No. So then will it be a relevant cost? No. Why? Because this cost is not going to impact my decision to buy the new car. However, if I am not selling my old car and now I am buying an additional car, I will have to bear additional rental expenses. So then this cost will become a relevant cost? Yes. Why? Why? The reason being, without this cost, then we will not be able to go ahead with the new car. And this car, in order to buy the car, this is an additional expense which is getting incurred. Done and dusted? So now, are you clear with what I mean by relevant cost? So I will give you one more example for the same. But then just a quick summary of what we have drawn from this example is relevant cost is that cost, all those costs that is going to be incurred towards that new project, towards that new asset. And if that asset is not purchased, if that project is not, you're not going ahead with it, then that cost is saved, then that cost is not incurred. Clear? So this is what we call as relevant cost. Correct? Let's say you already have, now let me take you one more example. Okay, let me give you one more example and then I'm giving you of Rohan's pizza. So everybody eyes on my screen. So now let's take an example where I'm giving you this case that there is Rohan. Okay, Rohan has a pizza corner and it could make delicious pizzas in his city. He sells each pizza for $300. One day, a client calls and says that he would like to place an order for 50 pizzas, but he can only pay $220 per pizza. Would he accept the order? I know. When we look at this question upfront, we say, no, ma'am, it's a loss. He's generally selling it for $300. Why would he go for somebody to accept the pizza at $220? So for this question, I think I can give you one answer. Have you ever observed that when you go to buy some items, let's say you want to buy burger from McDonald's, okay, and from the store, let's say the burger cost at that store $70. 70 is too much, $10. Okay, but now there is a corporate, your corporate or your office team have hired McDonald's as their event partner for their annual function. Now the same burger that you had, that you had bought from your pockets at $10 is now costing only $5, or let's say only $6 for the corporate event. Why so? Has suddenly the cost gone down? No. Have they changed the ingredients? No. Then why suddenly the $10 pizza is now costing $6 pizza? There is no change in the ingredients. There is no change in the preparation, nothing. The quality, taste, everything is same. But then also the cost has gone down. It's a very practical example, right? We all find it. One answer can be, ma'am, because you're buying quantities in bulk. Agreed. So for a bulk discount, we can have the discount. But do you understand how the discount comes in? That probably means that McDonald's has some spare capacity with it. McDonald's has already some time available that they can utilize to make the burgers. And when they are using the spare capacity to make the burgers, so their intention is to earn whatever amount they can just to cover their variable cost. I'll tell you why. For that reason, let's take this example. I will explain you this and then we will go back to the McDonald's example. So right now, keep that McDonald's example with a question mark. Okay, now, so here we are back at Rohan's Pizza and Rohan is now getting an offer that, boss, you supply me 50 pizzas at $220. Rohan says, wow, yeah, it's a very exciting proposal. The reason being the quantity is a lot. So with such huge quantities, it's very, I mean, it's going to be too fruitful for us to deliver the pizza. So now Rohan is making an analysis that whether I can actually deliver it at 220 or not. Just see how he's making the analysis. Now he's breaking down the elements to make the pizza. So let's say he breaks down that he would need flour, cheese, and toppings to make the pizza. And that's a basic ingredient. So that's like its variable cost. Because more is the number of pizza, more is the variable cost. And with every pizza that is going to bake, he would need these ingredients. Correct? So if this is costing 120 per pizza, is it a relevant cost for the decision? Yes. Why? Because in order to make more pizzas, we need more of these to be spent. Correct? So is this a relevant cost? Yes. Do we need to incur to get the new pizza? Yes. For every pizza that you want to make new, you need to incur this cost. Done. Next, labor cost. Who is this labor? The labor who is, putting the toppings, everything on the pizza and then baking it in the oven. So for every pizza, do I need the labor cost? Yes. Let's say we are paying labor per pizza basis. So if they are making even 10 pizzas extra, I need to pay them for 10 pizzas, right? If they don't make any pizzas, they are not made for extra pizzas. Done? So then 40 is the cost per pizza for labor. Is this your relevant cost? Yes. Why? Because without labor, we cannot make the pizza. So it is a relevant cost? Yes. Okay, so we will add 120, we will add 40 also for the relevant cost. Now, electricity, oven and packaging. That means you will be required to have electricity involved. Why? For packaging the pizza, for baking the pizza in the oven, we need electricity. So, more are the pizzas, more is the electricity. Less is the pizzas, less is the electricity. Correct? So then is it a relevant cost for pizza making? Yes, it is a relevant cost. 20, you will add it. Now next, shop rent. So now whether you make 100 pizzas, whether you make 2000 pizzas, or you make 5000 pizzas, or you make 120 pizzas, or you make 20 pizzas, the shop rent will remain same. So now just tell me, if I have to decide, if Rohan has to decide whether I should be getting the order from the customer or not, will this be a relevant cost? No. Why? Because whether Rohan gets the order or he doesn't get the order, shop rent will still be incurred. It's a fixed cost that will still be incurred. So we call this cost as committed cost. We call this cost as committed cost. Any reasons why? Because you've already committed that you're going to pay a monthly rent. Whatever is your production, you are going to pay a monthly rent. So when I'm looking for that, whether I will be able to compare, whether Rohan will be able to sell this to the customer at 220 or not, I only have to see that cost that is directly impacting this decision. Okay. Will shop rent impact the decision? No. Because whether we take this order or we don't take this rent is going to be incurred. So it has got no impact on the decision that I have to take customer order or not. Clear? So will this be a relevant cost? No. Okay, because it's a fixed cost, it's a committed cost that will be incurred even if no pizza is baked also. So it is not going to have any impact on the decision that whether I would be taking up. Okay, it will not have any impact on the decision that whether the customer order should be taken up or not. It is not a relevant cost at all. Next, manager's salary. Manager's salary is like this: a manager you have kept, let's say at the bakery shop, at this pizza shop. So whether you are selling 100 pizzas or 200 pizzas, he is paid on a monthly basis. He's not paid like per pizza basis. So he is paid on a monthly basis. So will this manager's salary be a part of the cost that I'm going to calculate just to decide whether it is beneficial for Rohan to take 220 price or not? No. Very good. Why? This cost is already incurred. So we call this cost as sunk cost. Ma'am, what is sunk cost? Sunk cost is the cost which is already incurred. Okay, already incurred. and it has got no impact on the decision that you are going to take. So whether you will go ahead with the customer order or you don't go ahead with customer order, I mean manager will be paid irrespective of it, because that's a contract that we have already entered into, and so we call it as a sunk cost. Clear? Now if I have to see what are the relevant costs for me to decide whether it's beneficial for Rohan to take the order or not, it is 120 plus 40, 160 plus 20, 180. And customer is giving him 220. Easy. So now, contrary to what we were thinking earlier of a loss of $80, there is in fact a profit of pound $40. So instead of a loss, now we have a profit. Why? Because we followed the concept of relevant costing. So based on which now we will accept the order. So relevant costing simply says that boss, when you already have an existing business and then there's a question to accept a new order or not, base your decision on relevant cost only, on the cost that will be incurred. So that's a future cost, that's an incremental cost, that's an additional cost that will be incurred if you take the order. Sunk cost, committed cost, past cost, which has already been incurred, has got no impact on the decision. Because whether you go ahead with that order or you don't go ahead, that cost will still be incurred. Now I hope you understand why McDonald's will be ready to take up that order, even to supply the burger at $6 instead of $10. Because probably from relevant cost point of view, it is still profitable for McDonald's to supply the burgers at $6. And that is a very practical example I'm giving you that you find with lot of companies, with lot of stuff that you do, and that helps you saving a lot of cost and taking the correct decision. Okay, any questions, any pointers you have so far? Then we will have a question, a small question where I would like you to give me inputs. Anyone with any questions? Okay, let's try out a question just to understand that are we clear with the basics of relevant costing even when we have not started with the chapter yet? Yes, we have not started with the chapter yet. We are just getting hold of it. Okay, so one question, please do it, Pooja. A company is preparing a tender for a new contract to build a bridge. Okay, focus. The contracts manager has spent 40 hours researching the contract and preparing the tender. He has already spent 40 hours where he researched for the contract and he was preparing the tender. She is paid a fixed annual salary of 96,000 for working 48 weeks and 40 hours each. How much should be included in the relevant cost of building the bridge for the contract manager's time? What do you think? How much of this would be included in the relevant costing? Or as per the relevant costing principles as a part of when we are calculating the relevant cost of building the bridge. Tell me the answer in the chat box. What according to you is the relevant cost? Okay, let's discuss it. So now here if you see, the contract manager has spent 40 hours researching the contract and preparing the tender. will it have any impact on the decisions that I will take for the building? No, right? So very good answer, Pooja. There is no relevant cost here. Why? Because the time that he has already spent is a past cost. Is it relevant? No. The salary is already a fixed committed cost. It's already a cost, fixed cost that we have entered a contract for. So whether the manager works for this building for 2 hours or 10 hours or 40 hours, he is going to be paid the same salary, correct? So will this be a relevant cost? No, because it's a committed cost. Done. So when both of these are not relevant costs, there is no relevant cost here in this question. Very good. So now if I have to summarize, relevant cost, so can I quickly say that the cost, what is the relevant cost? For that, you just have to discuss that whether the cost be affected by the decisions. Will the cost be affected by the decisions? If yes, then these are relevant costs and you will consider them in the decision making. Okay, like the cost which is future cost, which is an incremental cost. Incremental means additional cost which will be incurred if you go ahead with that project. It's a future oriented cost, so it is a cost to be incurred, which means if you don't go ahead with this project, then this cost will be saved. So for example, we have specific fixed cost. So what is specific fixed cost? Specific fixed cost is the cost specific to that project. That project is not there, fixed cost is saved. That project is there, fixed cost is not saved. Clear? So now what are future cost? Future cost is like the opportunity cost. Opportunity cost is what? Opportunity cost is the cost to not go ahead with the next best alternative. I'll give you an example, don't worry. Then this cost has to be cash cost, very true, where actual outflows are taking place. These are not book entries like a depreciation entry, for example. Then it is a very specific cost, like I gave you the example, fixed cost. If you don't go ahead with the project, then this cost is saved. For example, extra material to be incurred, additional labor to be incurred, new equipment to be taken. Now, the cost which is irrelevant that you will not consider for decision making, like we discussed, sunk cost, the cost that have already incurred in the past, like the research cost. The cost is already incurred in the past, so we don't need to incur it again, because irrespective of whether you go ahead with the project or not, that cost will not be saved as it is already incurred. Okay. Now, fixed cost is a cost which is like a committed cost, so that you have to incur irrespective of the fact whether you take the project or you don't take the project. This cost will still be incurred, and that is fixed cost. Some more irrelevant cost examples like non-cash cost, for example, depreciation, sunk cost, fixed cost, which are like committed that we saw in the example also. So past expenses, depreciation, committed costs are all non-relevant, and that is the base of this chapter, because students only face troubles when they get confused. Ma'am, we are not able to identify which are relevant and which are not relevant. So keep your basics very clear. Relevant costing. Let's have a repetition. Relevant costing is what? Cost which is relevant to the decision that you are going to take, like additional expenses, like future expenses, like incremental expenses. Okay, all these are like specific expenses. All these are relevant cost. Apart from this, all the committed costs, fixed cost, past cost are all irrelevant. Variable cost is always a relevant cost because it is always an additional cost to be incurred. Clear? Done and dusted? So only relevant cost will impact the decision. Always remember. Done? Okay, if you have any questions, you can ask me. Okay, now let's take up this topic even in more detail, and let's take everything step by step. Okay, now, so let's quickly see what all topics are we going to cover in this chapter. We will be covering a topic like opportunity cost, one-off contracts, shutdown decisions, along with the questions, make or buy decisions, and further processing decisions. These are all the topics that we are going to be considering for today's session. Clear? Along with the questions. So if I have to simplify relevant cost, guys, it would simply mean, and keep that in your mind, that the cost or the revenues that are affected by a particular decision of the management, be it a new project, a new asset, or you have to close down an operation. For particular decision, the cost which are directly getting affected are the relevant cost for you, and only those costs you will consider. Rest all costs, even if it's a big cost detail, you're going to ignore. Simply ignore. Done? Okay. So all my Durandars, so show your energy levels. Need that morning energy super duper high. Okay, so like I was giving you the example, I'm just repeating it here again. Fast food connections like McDonald's or Domino's, they often accept bulk corporate orders at a very low price because their intention is to cover the fixed cost only. As their intention is to cover the variable cost only, and fixed costs are already paid, so it doesn't really matter whether they are getting covered or not. Okay. So what are the relevant costs? Future cost, cash cost, incremental cost, specific cost, and opportunity cost. Opportunity cost means what? That let's say you have got an offer from a company to give you a salary of 100,000, and then you received a second offer from another company. Now what is your main aim? That I need to get minimum 100,000, so that the loss that I'm having because of not going ahead with company one is getting met. So this is your opportunity cost. Opportunity cost is the cost, though it is non-cash, okay, but it is the cost of not going ahead with the next best alternative. Let's see an example, and then probably we'll be able to understand it even more. Okay. So now before I go ahead, let's quickly understand three terms which are very important for you in this chapter. Number one, what is a current replacement cost? Current replacement cost is, let's say that I want to buy 10 pens in the market. Okay, 5 years back, the cost of one pen was $5, but now the price has increased to $10. Okay, let's take this example. So I want to buy the pens today. What is the price today in the market? $10. So if I want to buy the same pen today, I am able to buy it at $10. So my current replacement cost will become $10. It is simply how much it would cost now to get the same benefit as the old asset or the item. So the old asset that you already have, if you want to get the benefit for the same in the same item, then at what price are you able to get it today? What you paid yesterday is irrelevant. What you are going to pay today is relevant. So it is a relevant cost, and at a lot of places we will use this term current replacement cost, which is a very logical way that we will understand. Okay. Next, current resale value. Boss, what is the current resale value? You already have your iPhone 16 with you. You want to sell it in the market. So today you will get a value for iPhone 16. How much? 10,000 bucks. So that is your current resale value. When you want to scrap off your old asset in its own conditions, what value can you fetch from the market for it? That is your current resale value. Okay. That is basically your scrap value, simple terms. Next is opportunity cost. It is the benefit that you are losing by choosing one option over another. Basically means the value of the next best alternative that you are giving up. So what potential contribution you are losing is your opportunity cost. Yeah, you can see that it's a notional cost. That's true. So let's say that I can buy, let's say I can sell the item to Mr. A, and that will give me a contribution of 10. And when I'm going to sell to Mr. B, I will ensure that minimum 10 contribution I'm earning, correct? So what is that 10 contribution? It is opportunity cost. So that is the minimum price at least that you would look to earn. Okay, so we will see in the questions to understand that what do we understand by opportunity cost concept. Okay, any questions, any doubts so far? Then please put up in the chat box. Okay, okay, now we have a very important exam focus point that I want to tell you all guys, because that is like you cannot skip, and this is a pointer that you have to keep in mind, my friends. The reason being, okay, the reason being, this is a very important exam tip. Number one, or basically it is, explain why you have calculated the relevant cost in that way, as well as why you haven't used certain numbers. See, whenever you are handling any relevant costing concept or any relevant costing question, you always have to do two explanations. Number one, why you have taken a particular number when you calculated relevant cost, give a reason for the same in section C question especially, and why you haven't taken a particular number. So give reasons for the same. You do this and you get your answers correct. Okay. Now let's start one by one. So first topic that I'm taking in relevant costing. Now actually we are starting with this topic is relevant cost of materials. So in this chapter we will be specifically looking into when you calculate the material cost, what is the relevant costing principles to consider. Likewise for labor, and likewise when you want to purchase a machinery. These are the three heads that are in detail they are discussed here. Okay, so let's discuss. Now, please focus on my screen. Relevant cost of materials. What is this basically telling you? Now, let's say there can be multiple situations, right? First situation is you don't have any material with you in your stock. So there is a new order coming and you have to get the material. So what is your option then? To buy it from the market, because you don't have any stock with you. So you need to buy from the market. Now guys, at what price will you buy? Current replacement cost, correct? Because that is the current price of the material in the market. Done with the first point. Second, now let's say I have a lot of material in my stock, but there are three situations arising. First situation is this material that is there in stock is regularly used by company for other products also. That means if you use it for the project, then you will have to replenish the material with new stock also, so that the other products who are using the material will not have any delays and will be able to use it. So it's like a continuous processing of material is taking place. It's a regular item there. Done. So then what is the relevant cost for you? You got your material from stock, but then you need to refill the material. At what price will you refill it? Current replacement cost. Correct? That is the current cost to purchase material in the current period. Next option is that you don't take the stock or anything. Then also you have to buy from the market. So in this case, you take whichever course of action, you will have to buy material from the market and keep it in stock. And that is current replacement cost. Done? Anybody having slightest of queries, please put up in the chat box. Next. Just a minute. I'll just take you to one flow chart. Okay, look at my screen for this flow chart. So now we are discussing Number one, if a material is not there in the inventory, then you will have to buy it. So your relevant cost is current replacement cost. Clear? Done and dusted? If the material is in inventory and it is used like continuously, okay, for example, when you are making lot of machines, you need few spare parts, bolts, nuts that are used continuously. So for a new project you want to take, then you need to buy these bolts, and if it is there in stock, you have got them, but then the company needs to replenish it, correct? So from an organization point of view, it will have to replenish at the current replacement cost. So the organization point of view, relevant cost is this current replacement cost. Done. Next, if that inventory, if there is material in the inventory, let's say you want material A and it is already there in inventory, good part. Okay, that you purchased some long time back. Now, if the company does not give you, if the organization does not use this material for project A, which is the project in question, whether we are checking whether we should accept it or not. So if this material has no other use, okay, and you are going to, if you are going to use it in the project, then you will lose your scrap value because it has got no other use. Okay, since this material has no other use, so what the management thought, okay, let's sell it in the market, let's sell it. Okay, the management thought that let's sell it in the market and we will get a good scrap value price for it. But then the new project request came in. Now if the management moved this material to the new project, then what is it losing actually? Notionally it is losing that scrap value, correct? So we need to make sure that we are recovering that scrap value also from the new customer in their order. So that practically from organization point of view, you are not losing anything. So what is the relevant cost here then? Current resale value. And what is current resale value? Scrap value. Got it? Correct? I'll take this point again. So let's say that you have 200 kgs of material A in stock and it is lying in stock like for long. Now the management decided to sell this off. It can sell it off at 10 per kg. So the scrap value becomes 200 into 10, 2000. Done. Just then they receive a customer order that says that I want this material only and I'm ready to pay you a price. Then the management thinks, okay, fine. We will then use it for this order, great. But then because I'm using it for this order, I'm losing the scrap value that was there, that we were earning. So now management will include this cost also as a relevant cost when they are calculating the cost for the project, so that they are ensuring that at least this cost which they are losing otherwise, right? This is the scrap value which they are losing is practically not lost, and it is included in the cost that will be recovered from the customer. Clear? Done? Lastly, let's say a material is very scarce. Okay, very scarce means you cannot buy it from the market also. It's very short supply. It's in short supply. You cannot buy from the market. But then you need to make the project. Okay, and you need this material. Then what will you do? So what you do is, let's say you have two products which are being manufactured. Product 1 and product 2. Now you received an order for product 3. Okay, if material is scarce, you cannot buy from the market, but then you need to make a quotation for product 3, correct? So how would you do the quotation? So now here, let's say the material was used for product 1. Clear? Now you tell the manager that please don't use the material here, transfer it to product 3. Manager says, ma'am, if we don't use the material here, I will lose the contribution that we were earning because of the material. We were able to sell the product and we would lose the contribution. Now management says, boss, tell me how much contribution you are losing here. What is your lost contribution? Because you had already bought the material, correct? So that material cost is a sunk cost, not relevant to me. That is already there in stock. If you're using the same material in another product internally now, so what exactly the managers are losing? Product 1 manager is losing the contribution, right? Which otherwise they would earn. Because why I'm saying contribution and not profit? Because variable cost is a relevant cost, but fixed cost is not a relevant cost. Done. So what is manager losing? Manager is losing the contribution. So now what will be the approach? The approach will be that if the inventory is scarce and it is getting transferred from another product to this product, then the relevant cost for us is contribution lost. Then that is known as opportunity cost. The opportunity that you missed out of earning the contribution for product 1 because you are using the stock in product 3. Clear? So let's say if we lost a contribution of 10 per unit and 10 per kg and 500 kgs is the requirement, 500 into 10, 5000 is the contribution lost, that we will include as a relevant cost and we will recover from the customer, so that all the potential costs that the entity was about to lose are covered, and then the entity will be in a happy position to give this. Then the overall company's point of view, it is in a happy position to move the inventory from product 1 to product 3. Am I clear with this? Any questions? And please put up in the chat box. Let's do a quick summary here. So if I do a quick summary, guys, if the material is not in stock, and don't learn it, apply logics, okay? Don't learn it. If the material is not in stock, you'll have to buy from the market at current replacement cost. If the material is in stock but it is used regularly, so it means again you have to refill it at current replacement cost. If the material is of no use but scrap value, then the relevant cost is current resale value. If the material is scarce in supply and you have to move material from one department to another, so then the lost contribution is to be recovered. Done? Any questions? Let's try questions from this topic and for relevant cost of material, and then we move to the next one. Okay, let's try this question. Now, Bright Limited is planning to produce a one-time promotional brochure for a new product launch. The brochure requires 150 sheets of a special type of cardstock, which the company does not usually use. There are 60 sheets left in the inventory from a previous order and it is of no other use to the company. So that means what will be relevant cost for us here? Current resale value. But let's see the question further to see whether our situation changes. The cardstock was originally purchased 2 years ago at 12 per sheet. Is it relevant cost? Not relevant. Why? It was purchased. It is a past cost. Since it is a past cost, it is a sunk cost. Right? It is a sunk cost. Now, the company could sell the remaining sheets in inventory for $10 each, and they could produce additional sheets they could purchase the additional sheets from the market at 18 each. So this is a current resale value. This is a current replacement cost. What is the relevant cost for the cardstock for producing the brochure? Now let's see. First, see how many items are in inventory. 60. We want total 150 sheets. When we reduce 60, I get 90 sheets. Correct? Now for this, the relevant cost is current resale value and I will multiply with 10. Why? Because this item is already in inventory and it has got no other use. So when an item in inventory has no other use, what do you do generally? You will sell it off. You will scrap it off, right? So that's what is done here. So my relevant cost here would be the scrap value there. Next, for these 90 items, they are not in stock. So what we need to do, we need to buy it from the market, correct? At what price we will be able to buy it from the market? Let's see the costings. The additional sheets can be purchased from the market at 18 each. So I will multiply 18 here. Okay, now let's do the calculations and see what is the relevant cost. 600, 90 into 18 is 1620. Okay, 1620. So the total will become 2220. Is this your answer? Yes. So my relevant costing is, as per relevant costing principles, my relevant cost is 62220, 2220. Okay, are we clear with this? Any questions or queries? Please put up in the chat box. Okay, great. Okay, now let's do the next topic, that is relevant costing of labor. So how would we have the relevant cost of labor calculated? Now understand the logics. In costing, generally we take the labor rate. We're not talking about managers, we're not talking about supervisors. We are talking about the laborers who are hired on an hourly basis. If you want more hours, then you need to pay them. If you want to, if you want to even move labor from one department to another, then the department where the labor has been moved, then you need to pay them the hourly rate. So labor rate will be always an incremental and a future rate. Unless you have had a contract that look, we will be buying you for 40 hours, 40 days in a year, like that. Unless and until that contract is there, then the labor cost is generally an incremental cost. However, we have certain other situations, so let's quickly look into it. Just give me 30 seconds time and then we discuss. So in the meantime, just go through the flow chart. 30 seconds only. Yes, guys, so let's proceed, and let's discuss about the relevant cost of labor. Okay, now let's understand it very conceptually. Now let's say that I have hired a labor, okay, and I've hired him by saying that, look, I'm hiring you for 8 hours a day, okay, and I'm paying the labor for 8 hours a day. For 5 hours a day, he is working, and for 3 hours, he has spare time. Just because he has some spare time, I say that, okay, since you're spare, so do one thing, you take up this project and complete it. I am paying that labor for 8 hours. 3 hours that he is spare, he is using it. He's not doing any extra hour, nothing. What is the relevant cost for me here? What is the relevant cost for labor here? When the labor is already paid for a particular number of hours and he has spare capacity, he has some spare time available. So that's already a committed cost that is there, correct? We have already committed the labor that you are with us for 8 hours. Now you have to do all the work that I say in those 8 hours. Done? Clear? Right? So now when the labor is having spare capacity, he or she has scope for additional work to be undertaken, correct, within that spare hours, right? Will we have any relevant cost? No, no relevant cost. Very good, Pooja. Why? Because you're not asking him to do something over and additional to it. So why should we have any relevant cost? You work in a corporate and you are handling 4 or 5 projects with you. Just because you have been hired for a particular hours and a particular days. So then in those hours, whatever work you do, you have to complete it. Done? Clear? Great. Now for labor are living beings. They are not non-living beings. So that means you will never have a labor in stock. Correct? Understand that. Once a question was asked to me by a student, my labor is not there in stock. So I was like, I mean, it's an obvious thing, boss. Living, non-living, understand a bit. Okay, now let's go further. So, guys, keep your Josh levels, your energy levels super duper high. Now, when the labor is working at full capacity, you will have two options. Full capacity means, boss, all labors are completely full. They don't have even 1 hour extra. All labors are completely occupied. So in that case, what are the two options available? One is very easy. In fact, I will say there is 3 options. Okay, there is a third option also, that I will discuss you. Okay, so the every organization will have 3 options for it. Number one, very easy. You hire new workers from the from the market. Absolutely correct. And what price you will be paying? Normal workers pay, right? So whatever is the current wage rate, at that current wage rate, you hire the labor from outside and employ them in the new project. Why we are looking into this topic? Because our question is still the same. If we are undertaking a new project, what is the relevant cost of labor that we will take? Okay, labor can be skilled, unskilled accordingly. So now quickly, I repeat this again. If the labor is already at full capacity now, that means I hired 10 laborers for 10 hours each. They are already at full capacity, already. Okay, and they don't have even any spare hours available. So then in that case, one option is the company will get new labor from outside and that will have a cost, and that is generally the normal cost of pay that they are going to pay. Correct? Second option with the entity is that they can offer overtime. They can offer overtime to the existing staff. That look, you are hired for 8 hours, no? Do 3 hours extra and I will give you overtime pay. So what is overtime pay? That is the current wage rate. Because of course for that hours they will always take their current wage rate. But with this they will always have something extra, right? They will have overtime premium. You all watch movies, right? So when we watch movie, we have very various categories, right? You all watch movies in the same theater, but based on the seatings, we have different pricing style. Exactly on the same line. Now let's say that you have been hired hired with an entity to work for 8 hours a day. If you work extra, then what will you say? Boss, you will give me current rate, that I know, but you have to pay me something extra because I am working beyond working hours. Right? Well, most of the cases corporates don't pay only, and you are always working beyond working hours. But then technically you should be paid for it, right? So then the way of payment is to make you pay with the current wage rate plus overtime premium. Overtime premium is the extra amount that you are bearing, for the overtime that you are working. So that is overtime premium. Done. Third case is that just like material, when you're shifting labor. Now labor is a living being. So now here we are saying that let's say that staff is not ready to work overtime. Staff says, boss, we cannot work overtime. Okay, staff says, boss, we cannot work overtime. Okay, there is no labor available in the market also. There is scarcity. Now what to do? Now again, just like material, I will have to shift labor and I will say, labor, you stop working for product 1, start working for product 3. Now when we are doing the product costing for product 3, what we will do? Now let's say that for product 1, he was to work for 100 hours. For product 2, again he is working for 100 hours only. But now the shift is there from product 1 to 3. So what he will be required to be paid from product 3? First, the current wage rate. Of course, that he will always charge that, look, you want me to work in product 3, you need to make me pay this amount. Of course, right? So the normal wage rate will be here. Okay, plus now the organization knows. See, for labor it is not very difficult. They were working on product 1, now they will work on product 3. So for them what they will receive is a normal wage rate. But from an organization point of view, organization is losing contribution because they moved labor from 1 and 3. So product 1 contribution they are losing as they cannot make this product now. So that lost contribution also they will recover from product 3. Clear? I repeat this again, and if you have any questions and queries, ask me quickly. So now if your labor is already currently having spare time, then relevant cost will be 0 as they have extra time in their current schedule. Understand it logically. If your labor is currently working at full capacity, then if you want to hire more staff, you need to pay extra amount. You need to pay the amount which is current rate of pay. If you could not hire new staff and you cannot give overtime also, so then and you're moving the labor from the other process to this, then you'll have to bear the variable cost. Variable cost of labor is that normal wage rate, the current wage rate. Okay, and with this now you will take the lost contribution also, the contribution that you're losing because you did not go ahead with product 1. Very logical, right? The company would like to cover it, right? So that overall from the company standpoint, they're not losing anything. So even if they went ahead with product 3, they are not losing anything that would have earned them under product 1. So from a company point of view, you will cover everything. Yes, all potential losses and opportunity cost. Clear? Done. This lost contribution is nothing but opportunity cost. Okay, any questions, any queries? Please ask me. Otherwise, we'll just take up a question. So let's take up a question. In the meantime, type in all the queries that you may be having. Okay, let's do question number 2. First, we are doing this in parts and then I will take a full-fledged question also where material, labor, everything will be covered. Okay, so let's take question number 2. Now, Bright Limited is considering whether to accept a special order that will require 12 hours. That will require 12 hours of labor. Currently, all labor resources are fully engaged in producing wire. That means they are all working at full capacity. Right? So either of the 3 options we will take. direct material, direct labor, total cost, selling and contribution. So this is the contribution that they are losing for product Y. Right now what they would be earning, a contribution for product Y is 28. What is the cost of using 12 hours of labor for the special order? Now we are assuming nothing is given, so no overtime is there. We cannot buy it from the market, so we will have to take the approach of opportunity cost only, where we are moving labor from the existing process of product Y to the new process that the entity is wanting to take. Okay, now here cost per unit, labor contribution per unit is coming out to be 28. But we will do the calculations on an hourly basis. Clear? Now look here. So here what will be my relevant cost? First you will take variable cost, normal cost of labor per hour. Normal cost of labor per hour is 7. Clear? Now with this we will add contribution. Lost contribution per hour. 28 is the contribution per unit, and in a unit, 1 unit requires 4 hours. So lost contribution per hour is also $7. Total it will be $14 per hour. How many hours we require? 12 per hour. So the relevant cost will be 12 multiplied by 14. That will be equal to 168. So my answer is 168 is the relevant cost, okay, of using 12 hours of labor. Tell me if you have any questions and queries, guys. You have to understand it like thoroughly with proper clarity. Okay, let's take up the next topic. So the next topic is what is the relevant cost of machinery? It is the third relevant costing pointer that we are studying in detail, like material, like labor, and like machinery. After this, we will do some more exam-oriented scenarios. I'll give you a background and we'll do a question. Understanding why this is the relevant costing focused area. Okay. Now the next one is, ma'am, what is the relevant cost of machinery? Just think. What is the additional cost that we incur on a machinery? Repair cost, correct? Higher charges. If you are hiring a machine, then additional higher charges that you are bearing every time you are hiring it, that is the relevant cost. Then also we take what is the fall in resale value while arising from use due to delay in sale. What does this mean? Let's say that I said that, see, I have a machine with me. If it, and currently it is not used for any project. So we went to the market and we got, in 2026, I got a resale value of $500. But then just then we got a project, and project required this machinery. So now I'm using this machinery for this project. This project will be completed in 3 years. So we will sell off the machinery after 3 years in 2029 for $100. Yes, the value has fallen down considerably. Now, what is the relevant cost here? The relevant cost is the fall in scrap value. That's like the opportunity that you're losing, no? Because you're not going ahead with $500. You're going to be selling this machinery after 3 years at $100. Correct? So there is a loss which is taking place, a potential loss, which is of $400. So the relevant cost for machinery would be additionally to repair charges, higher charges, the resale value also, which is falling down as a result of the delay in sale, because you will be accepting that project. So that cost also needs to be recovered from the cost that we are calculating. Okay. So now please look here. Let's do this question number 3. These are good individual questions to understand the topic. Okay, now here we are J Limited planned to sell one of its production machines immediately for $10,000 because it was redundant. Okay, the selling value is $10,000. The machine's accounting depreciation is $2,000 per year. Running the machine cost is $500 per year. So the running cost is $500 per year. Okay. One-off contract has arrived asking J Limited to make 1 lakh components during the that is 10,100 components during the coming year, or we can say 1 million components during the coming year. These components can only be produced on this machine. If J Limited uses the machine for this order, then the company will be expected to be able to sell the machine in 1 year's time only for $6,000 and not $10,000. So what is the resale value that they are losing? $4,000, correct? And this is also a relevant cost for me because it's a running cost. Running cost is the repair, maintenance, that regular running and maintenance cost. That's allowed. What is the relevant cost? So very simple. Relevant cost will be 10,000 minus 6,000, the fall in resale value, plus 500, the normal maintenance expense. So it will be $4,500. Okay, I hope it is absolutely clear, crystal clear to everybody. It has to be very clear, as smooth as a butter. Till this point, any questions and queries? Because I'm going to be taking up the next question also. Fourth and fifth. They are very good questions that I will be taking up. Sixth will be homework. Okay, let's do question number fourth and fifth. They will tell you all these three areas pretty in detail. Okay, so let's do that. Now, look at my screen. Let's read the requirement first. Determine the relevant cost for quoting the one-off contract. So for each head, we will determine the relevant cost. Okay? Just a minute. Okay, look here at my screen. Emmerdale has been asked to quote a price for a one-off contract. The following information is available. Now, what is available? Let's read it one by one, and I will solve it also parallelly. Materials. The contract requires 3,000 kg of material K. The company already has 2,000 in stock, which was purchased last month for 19,600. The last month purchase cost, will it be a relevant cost? No, because it is a sunk cost, already incurred cost, and past costs are never relevant. Done. Current market price has increased by 5%. First, we have to see what was the old market price, and on that we will apply 5%. Okay. The company already has 2,000 kgs in stock. The question is not saying anything about whether it is of any other use or it is it is to be replenished. Since there is nothing given for scrap value, and when it is already in stock, we just have two situations, right? That there has to be scrap value, or we will have to buy it from the market, or third is opportunity cost. Opportunity cost is also not given, so we will not assume it. So that means now these 3,000 kgs needs to be bought from the market. At what price we will buy it? For that, we need to calculate what was the earlier price. On that, we will add 5%. Right? So I will write existing price is 19,600 is the total cost divided by 2,000 kgs. Right? So the cost per kg is 9.8. Right? Now we will have to multiply it with 105%. So here my relevant cost will be 3,000 kgs multiplied by 9.8 multiplied by 105%. So it will be equal to 3,000 into 9.8 into 105% multiplied by 3,000, which is 30870. So I've got the first one. Correct? I've got the first one. Next question, you guys will be trying a portion of it. Okay? I will be telling you that portions you will be trying. Okay, now the second part. The second part says it also requires one more material, which is 200 kgs we require. The company has 250 kgs in stock not needed for normal production. What does this line tells us? Company already has 250 in stock that it doesn't need for regular production. That means we will take current resale value. Why? Because the company does not need it for the regular production, right? That means it will look to scrap this product. If unused, material L can be sold at 11 per kg. Original cost was 3125, not relevant. Past cost. Okay. And the scrap value is 11 per kg. So what will be the relevant cost here? Relevant cost will be 11 per kg multiplied by 200 kgs that we require. Right. So the relevant cost will be 2200. Guys, if you find any questions anywhere, you are stuck, you're not able to understand, ask me there. Third, labor. The contract requires 800 labor of skilled labor, which is paid at 9.5 per hour. Skilled labor is limited and currently used in product B. So now we need to move the labor from product B to here, right? So then we just need to do the calculations. But for that, product P details are given to you. Selling price is 100 because I need contribution. Variable cost is including 38 and 22. So contribution will be equal to 100 minus 38 minus 22. Right? Sales less variable cost. So 100 less 38 less 22 gives me 40. Okay, now let's find out the relevant workings. So now the contract requires 800 hours of skilled labor and which is paid at 9.5 per. And this we are finding cost per unit. Okay, it is cost per unit. Okay, anyways, we know that here we have to follow the opportunity cost format. So here first, let's find out what will be the variable cost. That is the normal rate of pay. 800 multiplied by 9.5. Okay, 800 multiplied by 9.5. That is 7600. Now with this, we will add lost contribution. Okay, now guys, please focus here. Lost contribution will be, I think there is some data which is missing. Okay, let me add the data. So consider that one unit requires 4 hours and and yeah, one unit requires 4 hours. That's all. Correct? So now, no, there is no need for and. One unit requires 4 hours. So this is the contribution per unit. We have to get the contribution per hour because we have got the number of hours with us. Okay. So contribution per hour will be 40 divided by 4 because each unit requires 4 hours. That is $10 per hour. Now lost contribution will be 800 into 10, which is 8,000. So when you add it, you will get here 15,600. Yes, so my answer would be 15,600 for labor. But now what is the relevant cost? You have to add everything. So we will add 30, there was 30870, 2200 plus 15,600. So the total relevant cost will be 48,670. Are you with me, guys? So my total relevant cost is 48,670. Anybody with any queries? Are you now able to understand how do we deal with the opportunity cost concepts? How do we deal when material is in short supply or labor is in short supply or material is scarce? How do we deal with it? Any questions so far? Okay, let's take this question also. It's a very good question. Question number 5th. Okay. Yeah, I will explain material K point again. Now look at material K. See, what is the question giving with the scenario, Pooja? Contract requires 3000 kgs of material K. The company already has 2000 kgs in stock. See, the question is not saying that it is going to be resold. We will have a resale value, that it has got no alternative use. The question is also not saying that the material is scarce in supply. So that means we will, then what should we do? The other option is that this material is in stock and now we need to replenish it, correct? And also, even if the material is in stock, we just have three cases. Question is silent about the resale and the question is silent about opportunity cost. So we are just left with one option, that we will assume that now we need to refill the material. You take 2000 kgs, you will have to buy it again and give the company back 2000 kgs. So at what price will you buy? You will buy at current replacement cost only, correct? What is the current replacement cost? It says that your current prices have gone by 5%. They have gone up by 5%, right? So first step is to find the existing price, which is not directly given to me. However, it is given to me that the 2000 kgs and they were bought at 19600. So when I divide it, I find the price that they were bought at 9.8. But now the prices have increased by 5%. So I will multiply 105% and I get here 10.29. That means now currently if you want to buy the material from the market, you will have to buy at 10.29. Got it? And this now you will multiply with the number of kgs that you need. 2000 and 1000, 3000. Are you clear now? See, 1000 as it is, we will buy from the market only. 2000 also we are buying from the market as we have to replenish the stock again. Okay, are you clear now, Pooja? Great. Okay, now you will be doing the next part. Let's give this a try. LB company has been approached by a customer to manufacture a specialized machine. This is a one-off order. Okay, this is a one-off order. That LB company would undertake in addition to its normal production. The assistant accountant has prepared the following quotation. Okay, what is it? Just see. Direct materials quotation is given, direct labor, overheads, profit, all this is given to us. Now we will look at one point and we will solve it. Pooja, can you do the first one for me? Now first, I will give you the understanding here. The aluminum plating is regularly used on other work within the business. So it is regularly used on other work within the business, regular use. Okay. It has an inventory value of 10 per square meter. Do we think it's relevant? No, because it's a cost that has already been incurred. Inventory value means this was the price that you paid to buy the inventory. So it's a past cost. It is not relevant for us. And the current purchase price is 12 per meter square or per square meter. So can you tell me quickly what is the relevant cost that I will take for material for aluminum plating? We require 20 meters square. Okay, or 20 square meters. So now what is the relevant cost that I will take? Just type it in the chat box. Okay, type your answer in the chat box. The first one. What is the relevant cost? Very good. So give final answer. So you will have 20 square meters multiplied by 12. So 240 is the answer. Very good. Now let's do the next one also. Be ready with your calculator. Give me the final next answer also. All those who are watching the video right now, the session right now. Number two, rivets. We require 100 rivets and they have been included in the quotation at 1 each. Now, for rivets, what is given here? Rivets are currently held in inventory and they cost 1 each. Is this cost relevant? No, it's a past cost. Although the company has no further use, understand it has got no further use, they could be sold for a scrap value of 0.5 each. So what is the relevant cost for rivets when they can be sold for a scrap value of 0.5 each? We require 100 rivets. What is the value that I will add here? Type it in the chat box. Very good. Your relevant cost will be 100 multiplied by 0.5, which is 50, because we will take current resale value. Perfect. Let's take the next one. Okay, the next one is direct labor. Now direct labor is divided into two: skilled labor and unskilled labor. Skilled labor we require 50 hours. Currently they have been taken at 16 per hour, normal rate. Semi-skilled laborers we require 20 hours. Currently the normal rate is 10 per hour. Interesting? Now, skilled labor is paid at 16 per hour and is currently fully utilized on other work. If the job is undertaken, a maximum of 40 hours of overtime paid at time and a half. Time and a half means time is 100% of the normal rate, which is 16, and half is half of 16, which is 8. 8 is the overtime premium. So total we will pay to the employee 16 plus 8, 24 per hour. Okay. If the job is undertaken, then a maximum of 40 hours of overtime would be necessary to complete this job. A production or either you go with this overtime or you go with the production of another product would need to be reduced. The other product contributes 20 per hour. So we will see which is the better option. Okay. And just see how much hours do we need. See, right now overtime will cost the company $24. And here the contribution is only 20, but with 20 I will add the normal cost also. Normal cost is 16. So here my relevant cost becomes 36. Of course, it's cheaper to go ahead with overtime. But just see what is the hours needed. We require 50 hours. So that means how do we do the costing for this? 40 hours you take for overtime because maximum 40 can be done overtime and it's more cheaper. 40 into 24. Now with the remaining 10 hours you don't have any option. You will have to go ahead with this only. Okay, moving labor from another product to here. So we will have normal pay plus the lost contribution. It will become 36 per hour. So I will multiply this with 36. Total it will be 24 multiplied by 40 and 10 multiplied by 36. So total it will be 1320. Okay, tell me if you get stuck anywhere, any of you, I will answer it. Okay, next, semi-skilled labor. Semi-skilled labor we require 20 hours at 10 per hour. Now let's see this pointer. There are currently 100 hours idle for semi-skilled labor and we only require 20. So it is within that idle time, within that spare time. So will we have any relevant cost? No, there will be no relevant cost. Done? Okay, you know why? Because already we have spare hours available. Next, factory overhead. Boss, close your eyes and you can take this decision. Why? Unless it is a specific fixed cost, factory overheads will never be a relevant cost because it's an allocated cost generally. Okay, let's see. Overheads represent an apportionment of factory's fixed overhead. So it's a fixed cost, it's a committed cost, it's not relevant. We will take 0 here. Now for administration overhead, it is 10% of production cost. Again, the administration overhead also we will not consider, as it is again a fixed cost. Done. Now, what is the question requiring? The question is requiring us to calculate the minimum price on the order. Okay, minimum price means what? What is the least possible price that you can quote? And least possible price means what? No profit. That we just want to recover a cost. That's the minimum price that we can quote, and we cannot go below it. Yes, without profits. So will profit be also considered? No, it will also not be considered. Now get the total of cost. The total of cost will be 240 plus 50 plus 1320. So my relevant cost becomes 1610. Okay, it is the minimum price that we can ask for this order, and nothing more minimum than this. Am I clear? Am I absolutely crystal clear, guys? Everybody with no queries, please type it in the chat box. If you have a slightest of query, also type it. Question number 6 is homework. All those who don't have this material with you, click a photograph, do the homework. If you want, you can send me your answers for evaluation, right? And you have my WhatsApp number in the description. So just WhatsApp me your answer, and I will evaluate and revert back to you whether you are correct or wrong. Okay, let's take the next one. Now we are going to take up some specific scenarios. Okay, so we have done one question for the specific scenario, minimum pricing decisions. Yes, you will have questions in the exam where you will be asked to calculate what is the minimum price. And we know what is the minimum price. Just get the total of all relevant costs excluding profit. Because minimum price means you are just expecting to cover the variable cost and the specific fixed cost. That's all. Okay, you are not expected to cover anything more than this. You will just cover the variable cost or the specific fixed cost only. Done? Clear? Okay, let's move on to the next one. Okay, so I will just read this out and then we move to the next topic and we'll do more questions for that. Now look here. Minimum price for a one-off decision, because it's kind of a one for one particular decision you are taking it, is its total relevant cost. Basically, it's price where there will be no profit, no loss. So minimum price covers total of relevant cost only and not the profit element. Done? Okay, let's go quicker, more into the next topic, which is I'll take two topics here. Accept or reject decisions and make or buy decisions. Very important, as well as outsourcing. Okay, these three topics will be always dealt in together. Now, before I take this topic, I think there is a time that we should have a 5 minutes break. So just rejuvenate yourself, get your energy levels back, all my dhurandhars, and then we will resume and we'll do more questions, more interesting, full-fledged questions. Okay, so let's meet in just 5 minutes, only 5 minutes. I'm setting a timer for 10 minutes, but then we will meet in 5 minutes. Okay, don't go anywhere, guys. Yeah. Hi guys. So we are back. Yes, I know the break got extended, but that's okay. Okay, now let's quickly cover the portions. But let me give you a brief up about what we have covered so far. We covered about the basics of relevant costing. Okay, the basics. Like what is the basic purpose of a relevant cost or calculation? How it really helps the businesses to take correct decisions. Okay, by focusing on the correct cost. Second, we understood about in detail like how do we calculate the relevant cost of a material, labor, and machinery. Then, how do we calculate minimum price for a project that is to be undertaken? What all factors and what all pointers do we consider? Clear? Now let's go further and let's discuss about more topics like accept or reject decisions. So here what I've done, I have kept. Yeah, so here what I've done is I have kept some topic by topic, okay, some topic by topic situations, topics, and accordingly I have segregated the questions and we're going to be doing examples for the same. So these topics are generally asked in the exam. So you would know instantly by looking at a particular question, okay, this topic is tested, no? And we are doing it all logically with all the clear understandings and explanations so that there is no need for any kind of rote learning. Okay, now we have accept or reject decisions here. Accept or reject decisions means either you will accept the project or you will reject it. What will be your basis of exception, accepting or rejection is relevant cost again. Clear? So here accept the project if positive return on relevant cost, else rejected. For example, the pizza example that I took, right? So we had $120 was the cost. $180 was the cost that we got as per the relevant costing, and customer order was for a price of $220. Since we had a margin of $40 there, we would accept it. So where you have a margin, accept it. Where you don't have a margin, your cost is more, of course, and you're going to reject it because relevant cost is the minimum cost and you can never take the project below it. Okay, next. Make or buy decisions, they are very, very commonly asked decisions. I mean, generally, I've seen a question to be there from make or buy or outsourcing or minimum pricing, further processing, shutdown, all these topics, at least one question is always there. Apart from material cost, the labor cost, all that question. So, I've always found this to be a very, very regularly asked portion. Now, what are the points to consider here when you do a make or buy decision? See, make or buy means what? That either you make that product in-house or you outsource it to somebody else. So we may be just focusing on a particular process. For example, the companies who make shirts, what they do is they do the stitching and all in their factory, but let's say they have to put in buttons, okay, they have to make collars, they outsource this work to third party for many reasons. First, they may be having an expertise over it. Second, it saves time and cost for the company many times, right? And the cost element only we are going to test that whether it is going to be saving or not. Okay. Third, it helps the company to focus on more important parts rather than on stitching the buttons and maybe just stitching the collars. So the company can focus on more important parts, right? So these are some of the advantages that why would an entity would look for outsourcing a particular process. Okay. Now, few points I've written here that you should be considering before you take up this decision. Number one, how to use the spare capacity properly. Could the quality be affected or the process if we outsource the process? This is a very, very major pointer, that the quality should not be sacrificed. And a major reason why somebody would not like to outsource is when they find that the quality is getting compromised, okay, which should not be compromised at any point of time. Third, would the delivery be on time or not? That means the customer commitments that the entity has undertaken, would this still be met when the products have been outsourced? Ideally, it should be more earlier, right? But it should not be delayed. So that's a very major point of concern. Does does the company wish to retain control? Because sometimes it becomes a challenge for the company that they are not able to control the actions of a third party. Correct? They will place the order, they will receive it, but they cannot guide more there. They cannot, maybe just they will place their requirements. But how it is to be carried on, having that controlling on that will be missing out. So this is also one of the major factors that they consider before taking a decision that whether the product should be outsourced or not. Okay, next. Other factors to consider apart from the financial factors are like the impact on the workforce. See, not everybody is very comfortable with this, right? So, what is the impact on the workforce? Are they taking it in a positive way as a motivation, or they are being demotivated? The staff which was already doing the stitching work, are they feeling demotivated that our work got away, even though they've been allocated another work, right? So, that demotivation should not take place. Next, the customers, whether they are, they generally the customers will not be aware of this process. If they become aware, will they be comfortable with this? The competitors, are competitors also adopting the same policy, and is it really helping them in reducing the cost while maintaining the quality? Inflation, when the prices increase, even the outsourcing cost will increase. So will it still be beneficial for the entity? Check that. Suppliers, again, are the suppliers that are supplying to the third party, are they available? Okay, because their delay will have the further delay, right? So that is also very major point of concern. Fundings, right? If you want to make the and keep the entire process in house, do you have fundings for the same? Or even when you outsource it, you have to pay to that person, right? So do you have funds available for the same? Or is it cheaper than employing an employee? So if, or hiring a labor. So accordingly, we will do this comparison analysis. Okay, next. Outsourcing decisions, it's the same like make or buy decisions. So few pointers, just look here, and then we will take up some questions. Getting help from outside the organization, for example, hiring external suppliers for finished products, components, or services. Basically, subcontracting the activity, just like what we discussed. When you are looking for subcontracting the activity, maybe a part of the process you want to outsource it to third party, and they would do it and give it to the company. Okay. Sometimes the outsourcing also takes place of packaging. Your finished good is ready. Now the packaging will be done by a third party. So you will just receive the final packed orders. Then, when you do handle questions like make or buy, but when you have questions like outsourcing, then how do you do the answering? Only one exam tip I will give you. Always focus on calculation of variable cost, variable cost of making the good in-house. Then compare it with the outsourced cost. Why? Because variable cost is the relevant cost. Fixed cost is not the relevant unless it is a specific fixed cost. Correct? So then you will compare variable cost of making the product in-house versus outsourced priced offer. Okay, and accordingly we'll see if variable cost is more, then it's better to outsource. If variable cost is less, then it's better to make it in-house. Accordingly, we make the decisions. Let's do questions, and then we will do two more topics that are left: shutdown decisions and further processing decisions. Concepts are not clear, not difficult, my friends. But what is important is implementing the concepts and understanding how would you take out the answer. Okay, let's quickly look at my screen and let's do questions. Keep your calculators ready. So I am doing question number 7. Okay, let's start reading it and parallelly solving it as well. Now, Harbour Tech Company manufactures 4 components A, B, C and D which are used in its own production process. The expected cost of the company are given below and the variable cost per unit is given to you. The number of units are also given to you. Okay, these are important items for me. Now, there is a fixed cost, and I told you if specific fixed cost is there, we see. Because, if we are not, if we are outsourcing it, then we will have a saving of the same, correct? So, we will consider that as well. Okay, now focus on my screen. It's a very good question that I want you to focus on. So, what are the specific fixed costs? That means, how do I know it's specific? It's written there. Incurred as a direct consequence of making A. That means this is This is also specific fixed cost. This is also specific fixed cost. This is a committed cost that I will not consider as it is not relevant cost. Okay. Now, this is a specific fixed cost, specific, and specific. No directly attributable fixed costs are all cash expenses that will be saved if the component is outsourced. Clear? A subcontractor is offered to supply the components at the following price: 13, 19, 10, 11. Okay, now just see how do we solve this question. So I'm doing question number 7. First, what is your point of comparison? Variable cost of producing in-house versus the outsourced price. Product A, B, C, and D. Okay. What is the variable cost of producing in-house? It is given to you here 15, 16, 9, and 12. I will take this. Now I will compare it with the outsourced price. Outsourced price is given to me 13, 19, 10, and 11. Now you take the difference. Okay. So we will always take the difference as if my variable cost is more, I will take it in a negative way. Okay. Why? Because that means the product cannot be outsourced. See, your question is requiring you to calculate whether we should make it in-house or outsource, correct? So you can take any one of the sides. I mean, it is not a mandatory side that you will take only variable cost as a negative way. You can take it any of the side. I take it as variable cost. If it is more, that means it is more expensive for me to make it in-house. So I will keep it as negative 2. Okay, I will write here difference. And this is per unit, right? So difference per unit is 2. Here it is 3. Here you can say it's positive. Your variable cost is less. That means we can make it in-house. It's a positive sign, plus 1. And here it is negative. So that means only one product is looking like it can be made in-house. Rest all should be outsourced. But then we are not done. Why? Because we have a savings in the fixed cost also. And that is in total. So either you make it per unit or you make this total. Generally, fixed costs are not made per unit because their characteristics is not per unit. So what is the best way? You make it total. That means you multiply it with the number of units and keep the negatives as it is. So number of units are 1500, 2500, 3000 and 2000. So I will just write it here: 1500, 2500, right? 3000 and 2000. Now you multiply and get the value. Okay. So here positive is extra variable cost because that is the cost for the organization. See, when you outsource it, then you don't have a cost. That is a saving because then you are, see here why I have given negative. It's better to save, right? 15 is the variable cost. And if we outsource it, then we are saving $2 per unit. And in totality, when we multiply with the units, we will know what is more savings that we will have. So it is extra cost or savings in variable cost. So we will get in totality. Totality, when you multiply it, you will get 3000. Here 7500. Here 3000 plus, that's an extra cost. And here 2000. Okay. Now with this, we will add savings also. Savings in specific fixed cost. Why? Because if you outsource it, it will be more beneficial. You are saving more. How much are we saving here? We are saving 2000, 4000, 3000 and 5000. So let's do it here. 2000, 3000, no, 2000, 4000, 3000 and 5000. Right? This is all we are saving. Now you will write here Finally, what is the net extra cost oblique savings? Okay, oblique savings in um, outsourcing. Okay, so here we have a net savings of 5,000. So is it beneficial for the company to outsource it? Yes, because we are saving 5,000 here. Here we have a net savings of, wait, I think I've done it opposite. 16, it is less. It will be positive because variable cost is less here. So if we have a net savings of, no, here we have an extra cost of 3,500, right? Here we have an no extra cost, no savings. So it's like a no gain, no loss situation. Here the management will consider other factors to decide whether the product C should be outsourced or not. Product B is definitely not to be outsourced. It's more beneficial to make it in-house, so we make it in-house. Okay, and here we have negative 7,000. So we can comment like the product A and B. The product A and D, it's better to outsource it. This also to be outsourced. It's better to make it in-house. And here there is indifferent. Okay, that means the management will take a decision based on other factors, not necessarily on the basis of these financial factors. They will take it on the basis of other factors. I hope, guys, I'm absolutely crystal clear for the same. Are we done with this? Are we having the clarity? Because now I would be requiring you to do a calculation now. So here I am giving you one data. The outsourced price is per unit 15 and 23. 15 and 23. Okay. Now quickly tell me, by looking at this question, solving it almost exactly like how we did in the class. Just now I did the question. You have to tell me out of alpha and beta, which product should be outsourced and which should be made in-house. Or both should be outsourced or both should be made in-house. Quickly do this calculation. Everything is there on the screen. Do it and tell me the answer in the chat box. 1 minute to you. It has to be done in this time only. Be quick. Out of alpha and beta, which product should be outsourced and which should be made in-house? Give answer, give answer. Guys, I want the final answer. Do the calculation, give me the final answer, Pooja, and all the others who are watching this live. We have just done the question and tell me the answer. Consider the specific fixed cost also. Then give me the final answer. Alpha or beta, which is to be outsourced and which is to be made in-house. Final answer, Pooja. Okay, do it for beta also. Very good. So what is the final answer now, Pooja? What should be outsourced or what we should buy from outside? Alpha or beta? Alpha or beta? So like you have given me that yes, very good. Since we are savings, we are having savings. If we are buying it from outside, obviously then we will buy alpha from outside and beta we will make in-house because it is having extra cost of buying from outside. Very good, fantastic, perfect. Okay, now we'll just discuss one more question before I take up the last two topics and we'll have some 2-3 questions more to discuss. So just another 30 minutes, but of course I need you all to bear with me. Let's finish it off a very, very crucial topic in the most simplified way. Okay, so that you don't have to really learn anything. Okay, you just have to be conceptually clear. Okay, now it's a good question. Let's try this. A company produces a company produces three products, pawn, rooks, and bishops. The current annual financial performance is given to you. Sales, variable cost, contribution, fixed cost, and profit and loss. The company is considering to discontinue rooks. Of rooks, fixed cost, 5,000 are directly attributable and would be saved if production ceased. The rest would remain unchanged. Okay, wait, I'll stop here because I will first discuss the shutdown decision. Since we have not done this, so let's quickly look at the shutdown decisions portions first. So here I am taking the next part, which is shutdown decisions. What are shutdown decisions? Shutdown decisions would mean simply let's say if you have seen in the past, uh, Reliance had operated a lot of Reliance fresh stores, but now you find it very, at very limited locations and not as abundantly available as it was earlier. So you can see that Reliance now. Have you seen in my city, for example, there were 10 Reliance Fresh stores, but now we just have 3. How did they decide which 7 to close? Very important decision, right? How do they decide that which 7 Reliance stores would be closed? What they do is we analyze with the help of relevant costing that which of the stores are actually more profitable for the organization and which of the stores are actually into losses or very less profitable for the organization. And we look from the point of view of relevant costing. Yes, we look from the point of view of relevant costing. Clear? With the simple reason that see we have to analyze and see even though a company, even though a store may look like it is into losses, but a major reason may be due to the allocation of the fixed cost. So we will more focus on the contribution point of view to see that whether the product is giving us the positive contribution or not. See, if a product is giving you a positive contribution, even if it is negative in profit, that means if we remove the specific fixed cost, we just have allocated cost. So if we don't allocate it in to that product, then probably the company is still in a profitable position. And one more reason why an entity would not like to shut down its stores like that. So sometimes it affects the mental state of customers also. When they see us, the companies shutting down the stores, a lot, then the customers lose faith in that company, right? So this is also one of the reasons why shutdown becomes a difficult decision. Another reason can also be, let's say, that an entity had a loss-making store, which was the clothing store. But adjacent to it was the grocery store where the company was earning like great. So people who would come to clothing store may not buy clothes from there, but they end up buying grocery, right? So what was the benefit? That if clothing store is not shut down, even the clothing customers, they go to the grocery store. If the clothing business shuts down, many of the customers will not visit grocery store. So sometimes a loss-making store gives way to other profit-making stores also. These are all non-financial factors also that we consider and that you will be writing in your exams also. Okay. Now, see, now when we have a shutdown decision that whether we should shut down a particular store or a particular branch or a particular division or not will depend upon certain factors that we will see now. So closure of a particular product line, a particular division, a particular department will basically appear, that is basically appearing loss making. So our decision is whether we should close that product line, that particular division, that particular department or not. So we will not look at decisions based on profit but on contribution. Focus will change. And there we will consider specific fixed cost also. Under the relevant costing principles, when we're considering the shutdown decisions, the focus is on variable cost, is on the avoidable cost like avoidable fixed cost. See, if we shut down that particular store, then there are some fixed costs that are specific to it that we can avoid. So that also we will consider because that will give us savings if we shut it down. Okay. Then directly attributable cost and revenue if the closure is made. Okay. And then timing of closure. Like for example, sometimes you have great discounts coming up in the grocery store. And that time, if you close down the clothing business, it is going to affect your grocery store also a lot because the lots a lot of customers that were actually coming to clothing and ended up in grocery will now not be coming over there, right? So sometimes the timing also plays a very crucial role when you're taking the decision that whether we should shut it down or not. Okay. Now, clear? So now guys, let's quickly take up a question and formulate our answer. The same question that we were discussing, I am going to take it further. So we will end up doing, two questions. Second one, preferably, will be done at your end. Okay. Now let's see the discussion. So company produces 3 products, pawn, rooks and bishops. This is the contribution of pawns, this is the contribution of rooks and this is the bishops. You can see that this is the loss making one. Okay, so probably for rooks then we will see whether we should continue or shut down. Now, the company is considering discontinuing rooks. Of the rooks fixed cost, which is here given as 18,000, 5,000 are directly attributable fixed costs. That means that can be saved if Rooks is closed, or we will plan on incurring this fixed cost only. We will plan that if we go ahead with Rooks, then this is a specific fixed cost to be considered. Okay, so these are the directly attributable, and they would be saved if the production is ceased. The rest would remain unchanged because they are allocated. If Rook's production stops, the immediate impact will be there will be loss of contribution of 15,000 that you can see. There will be saving in fixed cost of 5,000, and there will be net reduction in profit overall of 10,000. Clear? Okay. Now, this is the Rook's position. Alternatively, the freed resources from Rooks could be used to produce a new product, Crowners, and it is expected to have the following financials. Rooks, if you see, it has a contribution of 15. Crowners will give us an additional contribution of 5,000. Direct fixed cost of 5, direct fixed cost are 6. Contribution to shared cost and profit is 10. That means 15 minus fixed cost. 20,000 minus 6,000 is 14. Whether Rook should be discontinued and whether company should switch to production of Crowners, I think it's very, very clearly given here. Yes, the company should do so, because if it discontinues Rooks and invest into Crowners, it will have a net increase in contribution by 4,000. So given this option, the company should take, and it is more profitable to discontinue Rooks and invest the same in Crowners. Simple. I think the question was having the answer itself. Okay. Clear? Right? If you have any questions and queries, please put it in the chat box, all of you. Okay, let's take the next one. I think that is going to be a more better question. Okay, so let me take this, and I will be doing it. It's a good question. Now, Lewis Company is expecting to manufacture 3 products, K, L, and G. The projected profit and loss statements for the upcoming year are as follows. For K, for L, and for G. If you see, K is a loss-making one. Okay, and we have fixed overhead also included here. So if I want to take out contribution, can I calculate it here? Even though I've not read the question, I think we can just calculate the contribution. So I will reduce 600 from it. I will reduce 200. I will reduce 95 and 75. I get a contribution of 230, right? Here, I will get a contribution of, actually I don't need others. I just need to focus on loss making. So here I am getting a contribution of 230. Okay. The directors are evaluating the potential closure of K product line due to the losses it has been generating. The following information is available. Fixed production overhead, including the portion of general factory overhead allocated based on 80% of the, so it includes a portion of general factory overheads allocated on the basis of 80% of direct material cost, but the remaining overheads are specific. So what is the specific fixed cost? Can we calculate? Specific fixed cost will be material is 200. Into 80% is your allocated fixed cost. When you reduce it from 210, that is the fixed cost here, you will get your specific fixed cost. So 200 into 80% is 160. 160 when you reduce from 210, you get 50. So my specific fixed cost is 50. I will reduce here 50. Okay, this is my contribution and my specific fixed cost is 50. Done. Now, selling costs are determined by commissions paid to the sales team. What is it? Variable cost. Right? Because it is not a fixed cost. It is based on the sales. So it is a variable cost. So you will reduce the selling cost also 30. Okay, now you see what is the profit or loss that you have. 230 less 50 less 30. We have 150 which is profit. So if we shut down We determine whether key product line should be discontinued and identify other factors also. If we shut down key product line, it will actually not lead to a benefit. It will lead to a loss for the company of approximately $150,000. Okay, because if we remove the allocated fixed cost, it's actually profitable for the company. We may just have to find an alternate basis to allocate the fixed cost. Okay, because the allocation only is letting the profits look loss. So actually, based on financial considerations, we should not shut down K because it is giving us, in fact, positive results. What other factors we can consider is that, like the other factors that we have already discussed about the controls, yeah, we can have for the closures, we can have closure cost. So if there's any closure cost to be incurred, which is substantial, we have to consider that. Then we have to consider that if we shut down K, will it have any impact on LNG or overall market position of the entity, the customer trust, customer relationships, all that also to be considered. Then one more point that if you observe here, the sales of K is 600 more than any other divisions. That means it is contributing more than 50% of the revenue. That is the overall end revenue of the entity, right? So shutting it down may have adverse impact on the overall revenue producing capacity of the entity. So instead of shutting down, we may just provide alternatives to the management. Like for example, maybe we can have some cost control strategies adopted, some economies of scale, some maybe decisions like firing of staff if the ones that are not very productive. So we can have those decisions also. We can do restructuring also. So all these factors can also be considered with a non-financial. Done, dusted, done with your shutdown decisions. Now, if you have any questions, you can ask me in the chat box. Okay, now I will move to the last topic, which is for the processing cost. Okay, let's start with this. For the processing cost, for that, I will just give you one quick understanding. See, so far what we have studied in our basics of costing is, so there are materials which are input. They are input into a process. And after the process, let's say it's a joint process. Why? These inputs will give you multiple products after they have been processed, and we will have multiple outputs at this point, and this point is known as split off point. So we have, let's say, 3 products generated here: product 1, product 2 and product 3. Okay, so till this point we have always started, and we call the cost that is incurred in this state as joint cost. That cost is already incurred, and these calculations of how do we calculate joint cost and all, we've already done in our basics, right? And we have already covered in our earlier section. So in PM this is not relevant. It will go further to it. Let me give an example. You have flour, your wheat goes into processing and it generates multiple joint products, multiple products, right? Because while we process wheat, it has got flour, the wheat flour here in this wheat. It has got refined flour that we call as maida. It has got even the suji that we call, that basically the finally you can say processed wheat, very finely processed wheat as well. Okay, so we have this semolina that we call as. Okay, so we have this the three outcomes of processing of wheat. So these 3 outcomes are the 3 products, though initially they were all together in the processing. Therefore, we call that cost as joint cost. And at this point where we are segregating these 3 products, wheat flour, refined flour and semolina, we call it as split off point, because this is the point where these joint products became separate individual products. Clear? Done? Right? So now I am looking from relevant cost of relevant cost point of view. So now I am at this point. Okay, in the relevant costing, our starting point is split off point. Okay, this is our starting point from relevant costing. So anything that you've incurred before it is not relevant because it's a past cost. So joint cost that you have already incurred is a past cost. We are looking for further decisions. You know, what is a decision in relevant costing? The question is, A, should it be further processed or not? So the question is, should we process A further process? We should do it further processed or not? This is my question. Okay, why? Because let's see, if I further process it, then my processing cost is 100. And this point, when it is further processed, we call it as final point, final sale point. And final sale point, I can sell this product. Okay, at final sale point, I can sell this product as 150. So my extra cost that I'm incurring on processing, extra cost is 100. What is the extra sale price that you are earning? You are not earning 150. You are earning the difference. Let's say here we could sell it at 70. Now with this, I can sell it additionally, I can earn 80 here, additional revenue. Additional cost is 100. Now, is it beneficial to further process? No, because additionally you are having a loss. Okay, so the additional revenue that you are earning for further processing is only 80. But for earning 80, you have to do a processing cost of 100. Right? And this is the future cost, right? Because we are currently at this point, current. And now we are taking a decision whether in future should we further process or not. So it's a cost that has not yet been incurred. We are still making a decision. It's a future incremental cost, 100. Future incremental revenue is 80. Net position is negative 20. Okay, net position is negative 20. That means it's actually not beneficial to further process this. That's all we are going to do in further processing. So keep it very simple but very clear. Okay, let's just read the pointers here. When we have to take a decision whether we should further process a particular product or not, then relevant cost would be further processing cost, which is post the split of point, correct? As we discussed, the split of point. For example, what is the extra fixed cost? What is the extra variable cost? It is incremental further processing cost or post separation cost that we call it. This split off point is also known as separation point. Okay, so the cost incurred after it, like specific fixed cost, like variable cost, that we will consider. Okay, now joint costs are the sunk costs, so they are not relevant costs, as I've already told you here. Now, what are the assumptions in relevant costing that we take? Very important. This is kind of a summary that I'm giving you for relevant costing, because when you do theory questions like true, false, like choose the correct option, these assumptions are many times tested indirectly. So this should be absolutely clear in your head. You know, these are kind of a disadvantages, because relevant costing assumes that the cost behavior will always be in a predetermined manner. That means what is the relationship between the fixed cost and total cost will remain same throughout. But it is practically not true. So this is a major, you can say disadvantages with the relevant costing assumptions. Number two, cost, price, volume are known with certainty. So as per the questions, even when you see, we know our price for certain, we know our volume levels for certain, and we know the cost for the certain. But many times, practically, it is very difficult to ascertain, always with certainty, with no probabilities attached. Meaning to say, relevant costing ignores probability. Well, ideally, it should be there. Because whenever you have a future environment, when we have an uncertainty, then always probabilities come there. But relevant costing don't consider probabilities. Then aim is to maximize profit always. We never aim to minimize cost. We always aim to maximize profit. This is a basic assumption with relevant cost. Okay. Now let's do two questions to be absolutely certain of the topic we just did, that is further processing. Okay. So I'm taking question number 11. Focus on my screen. Now, the poison chemical company produces two joint products, Alash and Potom, from the same process. The joint processing cost totals 150,000. Is it relevant cost? Not relevant cost, because it is past cost. Incurred until 1 lakh units of Alash and 50,000 units are produced. So add split off point. The selling prices at the split off point are 1.25 for Akalash and 2 per unit for Potom. Additionally, Alash could be further processed to produce 60,000 of a new chemical Alash Plus. But this would require an additional fixed cost of 20,000 and a variable cost of zero point 0.3 per unit. The selling price for Alash Plus is 3.25. First step is calculate incremental revenue. So incremental revenue will be, what is the revenue after you have converted into Alash Plus? It is 3.25 and 60,000 units of new chemical. So 3.25 multiplied by 60,000 less what was the revenue at split off point. So the revenue at split off point was 100,000 unit of Alash at 1.25. So get the additional revenue. 195,000 less 125, which is 70,000. So you can see that the additional revenue is 70,000. Right? Now let's find out the incremental cost. What is fixed cost? Fixed cost is 20,000. With this, we will take variable cost, correct? Variable cost is 0.3 per unit. Now, will I multiply it with 60,000? No, because what we are going to process is Alash. After processing, the final outcome is Alash Plus. Common mistake by the students. They get confused with which units should we multiply to get the variable cost. Remember guys, you will always multiply with your input units because variable cost is always done on the inputs, correct? So what you will multiply it with? You will multiply it with 100,000 units. Okay. So now that will be 100,000 multiplied by 0.3 is your variable cost. So total incremental cost turns out to be 50,000. What was your incremental revenue? 70,000. So is it beneficial? Yes, because we have an incremental profit. Okay, we have an incremental profit of 70,000 less 50,000, which is 20,000. So is it beneficial to go ahead with a large plus? Yes, because you will have an incremental profit of 20,000. So obviously it is very, very beneficial to go ahead with a large plus. Clear? Done and dusted, guys? Everybody? Great. Let's do the last question for relevant costing. Okay, let's take it here quickly. And I think this is a simple question which can be done at your end also. So give it a try, otherwise I'll do it. Last question. You have to tell me which product should be further processed. I'm reading the question, then you have to give it a try. I give you a minute and solve it, and just like flawlessly. Okay? Yes. The company has produced 3 products, X, Y, and Z, from a joint process. The output prices of each product are given to you. Product X, 2,500 units. Selling at separation point is 3 per unit. Selling after further processing is 5 per unit. And post separation costs are 10,000. Likewise, details of product Y, product Z are given to you, and joint cost is also given to you. No hints from my side. Give me the answer which product should be further processed, or all should be further processed. So whatever is your answer, type it quickly in the chat box. A minute I will give you. Only a minute. Quickly, answer. Only for this question, just tell me which product should be further processed. Give me the final answer, Pooja. Be quick, Pooja. Absolutely very good. Perfect correct answer. Z should be further processed because it is giving a net cost only, not profit. It is giving you net loss of, oh, I'm sorry, it is giving you net benefit of 2000. Rest all X and Y are in fact a loss to be further processed. Only Z is more profitable, more benefitable to be further processed. So that's all from my side for this chapter, where we did in approximately 2.5 hours in detail with 12 questions, detail explained with lot of examples. And I hope that this topic is absolutely 100% crystal clear, conceptually very clear, and we also know now how to implement it. Now do questions, do more practice, and people don't forget to like the channel, subscribe to it for more such surprise videos to be there. So we'll keep on having lot of such videos, and you all just maybe benefit from the same. Okay, for more details, you can join the Telegram channel, which is regularly updated, description of which is there already in the subscription box. If you want these questions and answers, just drop in your comments, question bank, and I will be sharing the questions and answers with you. So do that, do comments, share feedbacks. How was the session, whether you liked it or not, and anything that you want to share. Okay, so thanks a lot for joining. See you for the next live. Follow the channel, subscribe to it for more details. Bye bye, take care. Thanks, Pooja, for joining. Bye.